All right. I hope it's not too much background noise. Okay, I think we're back. And you know what? I think I'm gonna change this music too, because it's a little boring. Making me sleepy already. I didn't even get started yet. Let's see. Let's see. I gotta listen to Trap House beats, baby. Let's see if we can switch it up. Oh yeah. Let's see if the
None other than the Juggle Master, the Twin DJ.
I don't know, man. I think this might have voicing in it. It does. Here we go. Let's just do this one. All right, let's get this thing started. First thing we got to do is set up the chart. Another episode of Market ObservAnalysis, of course. And as we like to do, we like to make sure we have a real good visual on what's going on. So I'll start the timer here. And of course, what we'll do is we'll set our positions. For the sell. And then for the buy. There we go. Keep that green. Make this red. Boom. And then and just mark it like that. And we can start our ObservAnalysis. So the question is that we're going to be asking all hour is this the right time to trade? Is this the right time to trade? Let's find out. We're going to do a few things before we really kind of like answer that question. The number one thing that I'm going to do first is I'm going to show you what it looks like when it is the right time. What does it look like? Because the right time is actually it's visually recognizable. So I'll just bring up a quick example for you guys to look at. All right, let's use this one. I just picked something random, so let's take a look and see what this is all about. Okay, so what I want you to do is follow the mouse cursor. And as you're following the mouse cursor, pay attention to what this is doing and what this is doing. I also want you to pay close attention to what the market's been doing. Okay. I might play this back one more time just for you and then we'll break it down so that we can understand what the right timing looks like. All right, so let's play it back. Let's play it back, and then I'm gonna pause it throughout the video. Okay, so first things first. The reason why I say well, first we're setting our entry, but that's not really important. Most importantly, we want to see how this price right here moves in relation to this position right here. What I'm looking at and what I'm noticing is that you'll see this price incrementally moving kind of like around the same area. And so it started out in that mid-20s, and you see it kind of staying committed to mid-20s, low 20s, mid-teens, and it's stepping its way down. as it's stepping its way down, this is also stepping its way down. And so as the price is incrementally and slowly moving towards zero, the price is slowly moving further away from the strike. Not only is the price and the positioning moving slowly away from the strike together and slowly towards zero together, but the range of movement for this entire 5-minute binary has been inside of that same range of movement. So that's what we're looking for. That's what the right timing looks like. Now let's go back here, and we're going to make our positions real clear. We got a position here, and then we got a sell position here, buy position there, sell position here. Okay, you'll notice that there's a gap between this line and this green rectangle. And what that means is that anything below this green is no longer inside of this buyer's position. So if the market, like right here, for example, has touched outside of that green, it's in a seller's position, because that's where the seller's position starts. Okay. The line is at 1.16090. The seller's position starts at 1.16090. This buyer's position starts at 1.61091, which is 1 micro pip above the strike. In binary options, you're making, let's just call it a bet. You're making a bet to say that you believe the market's position is going to end either above this line, which would be right here, starting here, or at/below that line, which is, it looks like it starts here, but it starts there, right below there. Boom. Okay. So that's why I put that gap there. It's probably a little bit larger, but for visual, I want you to see that part. Okay. So is it the right time to take a trade? Well, of course not right now, because we need to pay attention to our opportunity window. The opportunity window hasn't opened up yet. This instrument that we're trading here is a 5-minute binary. Now, can I take a trade right here? Yeah, of course. If I were to take a trade right now, that means that I believe that by the end of this 4 minutes and 1 second, let's say I click on this blue. If I buy this position, I believe that by the end of this 3 minutes and 49 seconds, the position here is going to stay inside of this green rectangle. And I'm willing to pay $9 in this case to get $10 back. Now, if by the end of this 3 minutes and 20 seconds, the market goes outside of this position into a different zone, you see, this is one zone. If this goes into a different zone, so this is a different zone here, right here. If it goes into a lower zone, into a seller's position, if it sells out of this position, then I would lose that $9, because that's how much it costs for me to get involved in that. Now it's going into another position inside of that same zone. It's touching the bottom of this position here. It's touching the bottom of this sell position. Now it's back into this buying position. So I'm really paying attention to how the market moves inside of this position. And I want to see how it behaves inside of this position right now. We're still not at the right time to think about a trade, because we're not in the opportunity window. And the opportunity window, I guess you could technically call it an arbitrary term, but I usually open up my window around 1.5 minutes, 2 minutes maximum, depending on how stable the market is. So in this case, I'm going to open up the let's look at it window, the opportunity window, where I would start to really measure if this makes any sense as a good product at the 1 minute and 30 mark. So right now, before we even get to that point, the market's position is at the high side of the buy position. We can't do anything here. Technically we could, but what we would end up doing is we'd say, hey, I'm willing to pay $9.90 or risk $9.90. Let's put this just at 1. And I would get back $10 if I was right about this, that the market is going to stay in this position, or at least at or above this position. And yeah, I'd make a 10-cent profit. There you go. But I mean, is that really worth my time? Is that worth your time? Let's see. What's 10 cents? Hold on, let me check something. What 10 cents is? What percentage of $10? What is that? Like 10% of a percent? Let's find out. 0.1 divided by 10. Oh, okay. So 1% return. So the income building products that we focus on, that I showed the example of in this video here, we're looking at 15 to 20% per product. That's our margin. Okay. So that's the minimum requirement. I need a margin of, let's call it 20%, in order for it to count as a legitimate product. So no, that wouldn't be the right time to buy or right time to trade, because the margin for profit would be too low. So let's take a look here. We got a new binary. Let's just move this one forward. Let's set our positions. And you don't need to do this stuff, by the way. This just keeps it real visually obvious in case you want to kind of stand clear, just it gives you a little bit more clarity as to where the market is and what how the market's behaving while it's where it's at. All right, so we got plenty of time. Let's just review this product here. Kind of get an idea of what we want to see. Let's take a look at that movement. You see how incrementally, slowly moving back down. 7, 6. Slow raindrops. That's how it's moving. Look at the way this price is moving. You see how that's incremental? There's no big, huge jumps over like $10, for example. You may notice that the pricing here is a little bit different than the pricing you're going to see back on the chart. It's just a decimal point has been moved to the left. That's it. That's the only difference. So instead of me saying it's at $20, I'll say $2. Instead of me saying at $15, I'll say $1.50. It's different. They changed it, I guess, to get more people to trade, so they're not having to risk as much. So instead of me having to trade, $20 for the potential or risk $20 for the potential return of 80, I'm risking $2 for the potential of 8, or I'm risking $8 for the potential of a $2 profit. The percentages are all the same. You just have, you can buy smaller contracts now. So that's the only difference. But back here, we can see that so far, this binary has explored 2 different positions inside of one zone. One zone between this strike here and this strike here is one zone. So let's just zoom in on that. Let's get rid of the strikes just to keep it interesting. And then once the strikes become relevant or the opportunity window comes up, then we'll take a look. I guess I'll open it up now. So we'll bring those strikes in. The relevant strike here is this one. And the relevant position here, it's in a buyer's position. So this is the relevant position. Oops. I guess I'll record it. All right, so the positions at 5, we have $9.10, $9.89, 91, 87. So I see the market's dropping. The market has not dropped below that buying position, but I do like how this price is moving. Oh, it's suddenly jumping back up, so that makes me a little hesitant. But what I'm interested in is seeing if this position locks back into the buy or goes toward the sell. Locked back into the buy is 95, goes back towards the sell is 93. The pricing has already moved outside of what we would consider a minimal margin requirement, which is the 15 to 20%. Typically, I'm looking to at least see $8 flash on that price somewhere. Doesn't mean that it needs to be there when I take a trade. I just need to see it show up at least close to that dollar range, so to show that the market may be open to giving me a 20% margin. Okay, and if you actually take this and divide it by that, let's see what that equals. So if I were to take, call it $8. Okay, max profit 460. Max loss. So risk to reward ratio. Now what we're talking about, 1840. Okay, 25% return on investment. So with that skill, with this skill set, each product is going to increase your value by 25%. I started this account with, I think it was like $100. And so before they changed the platform, the margin was at 20%, between 15 and 20%. So sometimes you get 15, sometimes you get 20, sometimes you might get a little extra. So in this case, because the contracts are smaller, there's a little bit larger of a margin. So we're looking at up to 25% of a margin, which isn't so bad, at least with this as it's grown. So that's why I use this number. I'm looking for a certain margin. I could go for less. I could risk less and make more. That's cool. But yeah, look, I can risk even less. Cool. All right, great. But this is the product that I'm demonstrating is based off of a consistent 20% margin. So that's what you can expect from each product or each trade. All right, so anyway, let's continue. Let's make our buy position very clear. Sell position right here. And then end of our binary right there. Now, what do you see happening? A little bit of movement. A little bit of movement. Still nothing for us to really care much about. I'm just taking the mental note that there's a little bit of movement, you know. Movement is not necessarily a bad thing. What I don't like about this movement, though, is that it's back and forth movement. Like swingy movement. But that's okay. once we get to that window, we'll take a closer look, because one thing that I like that's happened in the past, let's see, 1, 2, 3, about 3 binaries, is that this one, and so far this one has stayed inside of one zone, and so far this one has stayed inside of one position. This one has touched 2 positions. This one has touched 2 positions. This one has touched 2 positions. So we have a consistent 2 position range of movement, but this one has stayed inside of one position. So that's a good thing in terms of the timing. But is this a good time to trade? Well, we don't see that our price fall in that 20% margin zone. You know, I need to see mid 80s, you know, low 80s, something to that, in that range, before the market's position confirms itself. And what I mean by confirm is when it shows me that range, that $8-ish range, after it shows me that, when the window opens, the position confirms away from the strike, not toward the strike, but away from the strike. When the market confirms away from the strike, that price was going to continue to go up incrementally. That's how I know that the timing is right. But the timing looks like it's at least getting there. So it gives me more of a reason to continue to observe. So I would like to see this market move down just a little bit. It's right in the middle of that buy. I'd like to see it a little bit lower on inside of that buy, and then confirm itself that way. And that way we would get closer to our margin, based on how the price has been moving lately. So we might, maybe, possibly, could see something. We might see what we might see something that shows us that the timing is right. But of course, we have to continue to observe. Okay. Okay, hold on, man. Wait a minute. I'm finna change the music up again. That's boring me. There we go. Yeah. Much better. That other one was making me yawn. So we're right in the middle of the buy. We got 3.5 minutes left. We got plenty of time before we even really start thinking about anything. So while the market's kind of dancing around, what I'm looking for inside of this whole range of behavior is what's been the lowest point in this range since the market's kind of moved into that. And you can kind of see there's a little bit of a skip up from here. Lowest 92, highest 93, and then this very next one, I bet you it starts at 94. Let's see. 94, yes, a little bit of a skip up. So from 94 moving on, what's been the lowest point here? There's 92. Okay, 92. All right, let me move back here. 92. 92. So let's do a little point to point. Okay. Now the market doesn't see all these strikes and stuff. It don't see all these lines, right? This is what the market sees. And there's something about this white line that's affecting the behavior and the tendency. Doesn't make it permanent, but from this point right here all the way over here, the market has not even attempted to move past this point, this line. But is it a good time to use that for a trade? Well, kind of see, no. Once again, we do have good positioning in the behavior of the market, because the market's range of movement is not only sticking inside of a zone, but for the past 1, 2 binaries, the market has stayed inside of one position. The only issue with this is the positioning of the market within the position. The positioning of the market within the position is at the mid-high point inside of the buy. But we want it to be more like in the mid-low point of the buy, because that's when that pricing for that 20% profit threshold number, that margin that we're looking for, that's when that would, especially when the market's moving like this with very small ranges of movement, that's when that usually will show up. So like for example, right here, lowest point 96, highest point 97. That's only a 1 micropip move. Over here, 95, 96, 1 micropip, 1 micropip, 1 micropip, 1 micropip, 3, 2, 1. So we see some behavior that is conducive to it being the right time, but the right time requires the right positioning too. So we need that to happen first, or excuse me, not first, but we need that to happen next. I want to see it touch that white line and see how it responds when it touches this white line. Let me get this out the way real quick. I'm gonna drag this along. Just like that. And then I'm gonna bring this back over here. All right. Still way too early inside of this binary to determine if it's the right time to take a trade yet. Might give me a little snack. That might give me a snack. Going into the sale, but still fairly good behavior. Let me go grab me a quick snack right quick, because we got time. You just enjoy the music. All right, so let's see what's happened while I was gone. Grab me some little Reese's Pieces M&Ms. Super impulse buy. I don't even know why I bought these things. Okay, so market's moving nicely. It has gotten out of its established range of movement inside of that buy position, and looks like it's exploring to find a new place. Inside of this window, in a minute and 30, we've already passed the point of that 20% margin potential. Oh, we've dipped right back down to it. So let's take a look. Let's continue to observe this one here. We haven't established a position here. That's the only thing that keeps me like, I don't really like that. But I do like the fact that the market's prices where it's at right here. And let's see how this moves. Okay, we're moving towards the strike. That's the wrong direction. We want to move away from the strike. I'm interested to see how this thing develops. Oh, sudden skip from 112 to 114. I do not ever mess with skips. So, is the timing right? No. You don't want the market to skip a step. It's kind of like when you're walking up or down some stairs and you think that the stairs have, hey, somebody's on here. Hey, what's up? What does that say? Affirm Christopher. That's a long name. Affirm Christopher Lamar Islam. I think that's what it says. What's good? What's good, Affirm? Yeah, so we're looking at the timing here. I like the fact that the market came to a position and then stayed there. That's good. I didn't like the fact that the market skipped ahead of its skipped a step. It's almost like, yeah, when you're walking up or down some steps, you think you have 12 steps and you have 11, and you make that last one. It's like the weirdest step you've ever taken. So no, it's like biting your tongue with your feet. That's not a good look. And sometimes you recover well. Sometimes it just ain't. It just don't work out right. But let's see how it, or if it maintains itself here. So let's set our position right. Let's take a look and see where it's ventured to. So it's been as low as 1 micropip above, 1 micropip above, 2 micropips above. Okay. All right, something to pay attention to. Here we go. So really, let's super zoom into this. Yeah, just like that. Let's see, this one is 2, 1, 1. Okay, so the market came and touched this buy, but it didn't establish itself inside of the buy. So even if the market like sets up, it makes the price look all cool, it wouldn't be a good time to trade in that case either, because the market is not reestablished yet. So we want to see in this binary, this one's not even, we're not even observing this one for the purpose of seeing if a trade is going to come. I'm looking at this to see how the behavior of the market's movements changes, or how it continues. That's what I'm curious about. And if you're doing this type of trading, this professional level, high precision, you're not going to get a trade every day. You're just not. But if you think about it, if you started an account, like a brokerage account or something, and let's say every month, once a month, your brokerage account, your stock, your crypto, every month goes up by 20%. How would you feel about that? How would you feel about that? Once a month, 20%. That's the approach I take with this. If I don't get a trade all month and I get just like maybe one, or what if your stock went up every month by 10%? How would you feel about that? So that's what this is. Instead of you buying a stock, your skill is the stock. Your skill is the crypto. Your skill is the asset. And that asset builds value. And the value of that skill per product provides a 20% margin. Takes some time for it to procure, but you see when the markets, or you see when that product is there in front of you, and you know when to collect it and add it to your inventory. So that's how I look at it. We've already established that this ain't nothing to do. Interesting. Will it stay in the buy? Will it stay in the buy? 91. So that's okay. Yeah, it stayed in the buy. That's cool. However, as it relates to this line here, my appellation is Christopher. Great content. I'm studying with Team Alliance. You have a 17-second lag. Oh, really? A 17-second lag? I wonder how to fix that. I don't know how to fix that. I didn't know that I had a lag. Yeah, that's a huge, that's annoying. Now I'm annoyed. So I don't know how to fix that. 17-second lag, what the fuck? But I'm glad you're here. I'm glad you're here, and I'm glad you let me know. But now I'm gonna figure out how to fix that shit. I don't know how to fix that. So this long line here has officially been broken. Right here. It's officially been broken. What's up with that? What's up with the live delay though? I wonder if there's something on my stream that's making it delay. Multi-stream. I'm gonna have to look into that, Chris, and see if there's a way for me to get rid of the lag. Let me see. Let's see. Videos. I wonder if that's normal when you do a live. I wonder if it's normal for it to lag like that. I wonder if that's normal when you do a live. I wonder if it's normal for it to lag like that. Well, I got about 3 more binaries. That's all I know. I'm sleepy. And the market, now that it's in this whole new zone, it's moving kind of crazy, right? Well, not too crazy. Yeah, I thought, I don't know. I don't know what to say about that 17-second lag. I don't know what to say about it. But yeah, I'm gonna look into maybe if that's like fixable or something. I'm watching myself on live, seeing about this. So I just I'm counting how long it takes for my camera to exit. Yeah, 17 seconds. How about that? I like the way this one is coming into this buy position. Doesn't mean anything yet because it's way, way too early for me to make any assumptions. And there you go. That's why I say that. So the market may be starting a new behavioral cycle, but I don't want to speak too soon. This is what we're looking at. No strikes. Yeah, it's really finding its position at this point. I mean, in one binary, we've moved. Well, it's really only been 2 positions, technically 3. This one makes it a 3rd position here, the top of the low. Oh, never mind. This is at the very bottom of that cell. Very bottom. So we've been in 2 positions. but we're not established inside of the cell. I guess let's bring up the strikes, huh? Bring up the strikes. We'll look at this, just kind of see how it moves. We'll record it. In the mid-teens, low teens, 66. Okay, 13, 12, 15, 12, 66. 12, 11, 18, 11, 24, 34, 40. You see what it's doing? Nah, brother. Nah, brother. I ain't feeling it. That action belongs to the streets. She too fast, brother. I don't want it. Established means you enter a position and it kind of like wiggles around inside of the position. It heads toward the door into another position without turning the knob, without pulling the door open, and without stepping foot outside of that position. It may wiggle around in the position and hit you can call it a ceiling or a floor inside of that position and bounce off that ceiling or floor. But in this case, anytime that the market moves through a strike into another zone, especially, that bounce does not count. Doesn't count. What we got? About two more. So in this case, we got back in the buy. So yeah, the sell positions are bigger than the buy positions, by the way. I don't know if you've been able to recognize that by now, but sell positions are bigger than buy positions. Because buy is above and sell is at. That's the additional size right there. Or below. At or below. Yeah. Oh, yeah, boy. You know what I'm saying? Let's see if it establishes itself here in this buy. All right, it's right at the bottom of the buy right here. So it has an opportunity. It's at the door. It's at the door. It's been drinking all night. Don't grab those keys. Do not step foot outside of that door. Do not go to 70. Do not leave that one alone. Come back. Okay, it came back. Came back with a little bit of stumble right there, though. It went from 71 to 73. A little stumble, you know, but it's still in the house. It's still in the buy. Oh, man, it's stumbling. Now it's a little unsure. Let me take a look. 71. Okay. 71. A little back and forthy on that, right? But still too early. No big deal. I'm just saying. Did it break the... No? We might be able to record this one. $73, $71, $71, $73. Let's record this one. Yep, let's record it. Okay. 72, 67, 59. Ooh, I don't like that. Right back at that doorway. 60, 71, 671. What are you going to do? 550. Oh, that's not. It's leaning outside the door. Hadn't fallen outside the door yet, though. Big jump in price. Maybe we might see another skip here. One. Okay. Oh, we were just getting confidence in that, too. This is real. It's kind of stumbling around a little bit, right? You see how it kind of jumped up and then it stumbled back and is doing that again. Doing that again. You don't want that. This guy's drunk. It may still stay inside of the house. It may still stay inside of the buy. Just a little wobbly. A little wobbly on that. You think that was a good time to trade? Would that have had your confidence? Would you put $2,000-ish on the line for that one? I would not. I looked at it. I considered it. Let's watch it again. We only have... Yeah, let's watch it again, huh? For old time's sake. Okay. 72. 67. 59. Ooh, I don't like that. Right back at that doorway. 60, 71, 671. What are you going to do? 550. Oh, that's not. It's leaning outside the door. Hadn't fallen outside the door yet, though. Big jump in price. Maybe we might see another skip here. One. Okay. Oh, we were just getting confidence in that, too. This is real. It's kind of stumbling around a little bit, right? You see how it kind of jumped up and then it stumbled back and is doing that again. Doing that again. You don't want that. This guy's drunk. It may still stay inside of the house. It may still stay inside of the buy. Just a little wobbly. Yep. A little wobbly on that. I agree with me. You think that was a good time to trade? I do not. Would that have had your confidence? Would you put $2,000-ish on the line for that one? Well, I don't think so. It was doing hezzies. I ain't trying to mess with no hezzy. Stick to the fundamentals. I looked at it. I considered it. Let's watch it again. All right, this is the last one, and I'm going to bed. All right. Good news is that we're still inside of the buy position. That's good news. So it's actually worth looking at. Maybe. Just maybe. 71. Let's get a point line at 71. Little cricket. There we go. Okay, we might be able to record this one. Maybe. Yeah, we'll record it. Okay. 71, 73, 75, 73, 71. Just a, okay, mid 80s, 74. 85, 86, 87, 86, 87, 86, 87, 88, 87, 91, 85, okay. Okay, a little outside of the threshold there. I'd like to see if it confirms itself. Oh, it didn't confirm itself. It violated itself by going against itself. Now look what it's doing. Let's see if that one holds up, huh? It's pushing against it. Interesting. How would you feel if your $2,000 was on this one? How would you feel? Ooh, how would you feel? You think that's a good time to trade? Well, do you? You already know what my answer would be. But I think we've had a pretty good session. Done a good solid hour. We're close. If you were to ask me, we're not there yet. But until next time, I hope you stay on top of your observations. Hey, share them with the group if you're in the group. If you're not, do something about it. In the meantime, until next time. For you.